Good morning. This is Larry McMillan with a market update on Monday, August 31st before the market opens. Well, S&P has just been blasting to the upside along with NASDAQ. S&P has made a new all-time high on 8 of the last 9 trading days, including the last 6 in a row, that either intraday or closing, and NASDAQ has done it 10 in a row. The Dow is still lagging behind, and then the Russell 2000 even farther behind. But since we're mostly discussing the S&P 500 in these talks, that's what we're pretty much concerned with. So it's overbought. A lot of other things are overbought too, but that doesn't mean sell. There's support at 3,400 on the S&P, which was the old all-time high that it broke through last week and then followed through very strongly. And there's successive levels of support about every 40 points down to 3280. If we were to fall below 3280, that would be very negative, and I think would change the entire game to a bearish picture. But as long as we're staying above that, and especially as long as we're staying above 3400, which was the old highs, the chart of the S&P is bullish. Not everything else is bullish, though. There's some severe overbought conditions, especially in put-call ratios. The equity-only standard put-call ratio has now dropped down to levels last seen in June of 2000, 20 years ago, more than 20 years ago, which is really pretty amazing. And that was the top of that bear market that started then and lasted for the next 2 years. So, this is a dangerous area, at least. The weighted ratio is also making new relative lows, and it's the lowest it's been since early 2004. 2004 wasn't exactly a major top, but we're still very, very overbought. Back in 2004, it was relatively normal for the weighted put-call ratio to be trading at these levels. Today, that's no longer the case. But until these ratios roll over and start to rise, the market can continue on higher. Breadth has improved a little bit at the end of last week, and so the breadth oscillator that we use with stocks only data has actually returned to a buy signal. The previous sell signal was canceled out. The New York Stock Exchange breadth is not quite as strong, so it's still on a kind of weak sell signal. We also have been looking at cumulative breadth quite a bit, and just looking at issues, cumulative breadth issues, that there is a negative divergence in place because that has not made a new all-time high since August 12th, while S&P has gone on to several new all-time highs since then. However, if we look at volume, in other words, volume on advancing issues minus volume on declining issues, and add that total up every day, that is making new all-time highs. So that is a positive factor for the market. When the market turned south in February of this year, we had a negative divergence from both breadth and volume. Now we just have it with breadth. But still, we need to stay alert because unless that improves, it could become more of a problem. VIX continues to amaze me. We had several days last week where VIX was up and S&P was up rather strongly. We've had some days where SPX is up and breadth is negative. That's also unusual, but for VIX to be up strongly when SPX is up strongly is really bizarre. But it didn't hold into the close, so we did not get a spiking condition in VIX. So generally, we're still grading VIX as a positive factor for the stock market because it's below its 200-day moving average, which is really all the way up at 28 right now. So VIX is, roughly 22. And just one other thing on volatility, realized volatility is extremely low, continues to contract as the market moves higher, which is typical. It's the way the math works on that. But the 20-day historical volatility of SPX is now down to 8%. And again, that's a danger, an overbought condition. We are heading into some seasonally negative periods here. Actually, August is also typically seasonally negative. It certainly wasn't this year. And election years tend to distort those things a little bit, making things more positive than they might have been otherwise. Although I don't know how much influence the election is really having on the market right now, except for the fact that it's keeping volatility pretty high. In any case, that pretty much sums it up. We're bullish. The chart is bullish, chart of SPX. And until we get some confirmed sell signals, which we are certainly looking for, we're not becoming complacent here at all, but reluctant to sell unless we have sell signals, because if you had done that, you'd have been shorting this market pretty much all the way up. It seems like it's been overbought forever, but it just continues higher. So that's the condition of things, and that's how we're viewing it. I invite you to visit our website, optionstrategist.com, where you could do things like sign up for our Saturday lectures, one a month, or take a look at our newsletters, which have been having a very excellent year. In any case, good luck and have a great week trading.